Do you know that silver has begun to outshine gold now? Silver has gained 30% this year, while gold prices have increased by 27.5%. There are other commodities such as platinum and cobalt that have gained more. However, we will confine ourselves to the prospects of silver today. Namaste. Silver prices are currently ruling above $37.5 an ounce. We had said in our earlier episodes that the white precious metal will face physical shortage for the third consecutive year in 2025. Silver's utility, particularly industrial use, is increasing. Solar energy, electrical vehicles, semiconductors, and 5G infrastructure are using silver in a big way. In this regard, recently, client associates came up with a report, The Investment Case for Silver. To tell us more about their views on silver, we have with us Mr. Nitin Agarwal, Director, Investment Research and Advisory at Client Associates. Welcome to Trending Commodity Pick Show, Mr. Agarwal. Can you kindly explain what is the investment case for silver?
Sure. First of all, thanks for having me here. See, silver as an investment case is very interesting. It's to somewhat it is very similar to gold. The prices move in tandem with gold, but the timing and the extent of movement differs very much from the gold. For example, silver, unlike gold, is also used in industrial activity. So gold is only kind of an investment vehicle, but silver, along with the investment vehicle, is also used in industrial activity, and that is why silver moves a bit different from gold. And currently, given the gold has already rallied, silver generally lags behind gold and catch ups with the gold's price movement, and that is why overall we expect a further upside in silver when compared with gold.
As we see now, silver has gained about over 30%, whereas gold's gain has been only 27.5%. How do you
Yes.
see that?
Probably beginning of the last year 2024, that's when gold started rallying significantly, and till March this year gold continued to rally. But then we saw that given the price of gold and given silver was lagging behind, we gave an overweight call on gold, and we said, now it is time to enter into silver instead of gold. Now that's where, if you see over the past 3 4 months, silver has outperformed gold significantly. Gold is stable; it's not gone down, but silver has certainly outperformed, and that is very much the trend that silver has shown over the past years, where first gold rallies, and then when the economy stabilizes, there is more clarity, and then silver starts rallying because silver is tied up with silver moment is tied with economic activity. So once the economic activity starts moving and improving, and which we expect over the next 6 months, we'll get more stability once trade tariffs and everything gets settled down. Silver is the commodity where we will see more upside than gold.
The festival season is on upon us currently. So, with Raksha Bandhan having started, now we'll have festival period going at least until December. It's also a time where a lot of marriages take place, particularly in South. So, how
Mhm.
do you think the silver will behave during the festive period?
See, we are quite bullish on silver. Even especially the festival demand will also push silver high. That is another tailwind for silver, and not for only for silver, gold as well. Now there comes the concept of gold to silver ratio. So what we have seen historically as well. There is always a ratio, the ratio of gold to silver, which is how many ounces of silver you need to buy 1 ounce of gold, right? Generally, the average has always been around 68, 70, but early this year that ratio reached 100. Now with the silver rally, that has come down to 90, which is still above their long-term average. Now the basic assumption is that given the festivities, demand for both precious metal will go up. So gold will also go up, but that also provides further upside potential for silver because the ratio will keep on rising if gold goes up, and then silver has to catch up more if we go by the historical trends. So that is where we see that, not only the investments, which, driven by, the festivity demands or the marriage demand, it's just the way silver reacts to overall demand as well as the economic activity. Once economic activity increases, the gold will go down, but silver will increase. So we see, all these tailwinds, as whether consumption led by festive demands, marriages. Silver has a great potential as an investment vehicle for the next 1 year.
The third consecutive year, we are witnessing physical shortage of silver.
Mhm.
Is this likely to prolong?
Supply is limited. So we have seen over the past 4 years, there has been a deficit. The demand is more than supply, and the demand is exactly, primarily driven by industrial usage. If you see, the demand for silverware investment has reduced, right? But the demand for industrial use, where, the silver is used in, these all electrical vehicles, electronics and all, that demand has actually increased. That is actually leading to a deficit on the supply side. Now that we expect to continue, though there may be, the deficit might reduce, but we expect the deficit to continue. So that is more of a fundamental or structural tailwind for silver. And along with the technical aspect, where, silver is lagging behind gold, or all the other precious metals, we see that both of these will actually support silver prices going forward.
And one final question. If I were a smart investor, what should I do?
That's where your overall allocation comes into play. Both silver and gold provide diversification benefit. First of all, especially when we're talking about, public markets, equities, when we are creating a portfolio for any client, what we do is that, along with the public market investment, which is equity, stocks and all mutual funds, we always suggest them to take exposure to gold as well as silver, right? So gold should always be part of your portfolio, right? Probably 5% of your overall portfolio, because gold currently might not give you a significant upside, but it is a strong diversifier. If the correlation with the equity market is close to 0.1%, whereas gold and silver correlation also is around 0.7. So both of them provide a very strong diversification benefit, as well as potential for return when the public markets are not doing well. So as a prudent investor, I would suggest that you continue to invest in public markets, but also have an exposure to gold and silver for long-term perspective, where it will provide you more stability in your overall portfolio.
On that positive note, let's keep smiling and be happy. This is Subramani Ra Mancombu signing off until our next episode. Good luck.